Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
Hey guys, it's Robert from the College Investor here, and today we are going to talk about private student loans. Specifically, we're going to look at a lender called Raise Student Loans, and we're going to talk about why you might want to get a student loan and why you should consider them as well. So it's almost the spring semester for some people, or spring quarter, and you might need a student loan for the second half of the year. I always see student loan stuff peak around this time, not as much as in the summer and the fall when people are getting ready for the main quarter or semester, but there is this second little hump right now when people are starting to think about these things. The other thing that's going on right now, and we talked about this last week, is it's FAFSA time. So if you are looking to get student aid, you have to apply for the FAFSA. But once you guys apply for the FAFSA and you get your student aid, two things typically happen. One, you either forget and don't file, and then you don't get any type of federal student loans. Or two, those student loans aren't enough to cover what you're looking for and what you need to pay for college. In that case, it can make sense to get private student loans. I don't necessarily recommend it. I think there's better options to pay for school, but private student loans do exist, and they can be helpful for people in certain situations. Now, one of the lenders that we're going to look at, we're going to talk about today is called Raise, and they are part of Credible's network. So if you guys know, I recommend Credible when it comes to student loans. And so if you want to go to thecollegeinvestor.com/Credible private, you can see the different student loan options that are available to you, and you can compare your options in about 2 minutes with no credit check, which is awesome. So once again, that's thecollegeinvestor.com/Credible private, and you can see private student loans with no credit check in 2 minutes. But let's dive into Raise and see why I'm even reviewing them and why they might make sense for you. Well, Raise student loans are traditionally just like any other student loans. Right now, they have interest rates anywhere from 5.33% up to 15%, which is a little scary, and loan terms ranging from 5 to 10 years. If you're a student, you can also choose to not just defer your loan when you're in school, but you could do interest-only loan payments, which can actually save you a lot of money after college if you think you can afford those loan payments. But when you pay the interest while you're in school, it will keep your debt from ballooning out of control, and it can also help you build your credit. At the same time, though, if you don't think you can make those interest-only payments, it can hurt your credit, so make sure you select that option very, very carefully. With Raise student loans, they do have a grace period after you graduate, but it depends. If you drop below half-time enrollment or, other things change with your schedule, they might not give you the full 6-month grace period. So you need to make sure that you're very careful and you fully understand what you're getting. The cool thing with Raise, though, and this could help students that already have some credit established and they're working full-time, is that Raise is one of the few private loan lenders that doesn't always require a cosigner. The Department of Education did a study, I want to say about 2 to 3 years ago, and they found that 90% of private loans were requiring a cosigner. And that can be tough because that means someone else is on the hook for your student loan debt. And if you don't have a parent or guardian that will cosign for you, it could be tough to get private student loans. But Raise is one of those student loan lenders that don't always require a cosigner, but they do have minimum credit and income requirements. So if you don't know if you're qualified to make the payments while you're in school, they're probably not gonna let you go cosigner free, and they're probably gonna have to go find someone to cosign the loan. Just remember, it's important that the cosigner, they are going to have all the same obligations as you. So co-signing a loan is a huge responsibility, and we rarely recommend that anyone co-sign a loan. The other thing is if you get a private student loan and you get a co-signer, I strongly recommend you get a term insurance policy on the borrower, because heaven forbid something happens to the borrower, they die, the co-signer is 100% on the hook for the loan, and that can be very, very challenging on the co-signer. So, who should consider Raise and private student loans in general? Honestly, we recommend avoiding private student loan debt as much as possible. But, a little bit of debt can help you invest in yourself and invest in your career. And you just need to make sure you're calculating the ROI on your education. So, make sure you apply for the FAFSA on time. Make sure you take advantage of your federal student loans first. And then only then should you consider a private student loan. And don't go hog wild. Please make sure you're being responsible with this debt because it can be a challenge to pay it off after you graduate. All right, guys, hopefully that made a little sense about private student loans and getting a loan through Raise. Honestly, you could shop around. We recommend you shop at collegeinvestor.com/credibleprivate and see if shopping for a student loan makes sense for you. All right, guys, thank you very much, and I will talk to you next time.